welcome to Sectors Up Close. I'm Elena Casas. Our focus today is on big tech, and my guest is Randy Watts, Chief Investment Officer at O'Neill Global Advisors. Last week's headlines were a mixed bag for Silicon Valley's giants as they released third-quarter results. Alphabet nearly doubled its profits in the quarter as businesses pour money into online ads, while Microsoft reported a 48% jump in profits to $20.5 billion. All that helped the Nasdaq, where big tech dominates, to gain 7.7% in October. But Apple took a $6 billion hit to its sales in the fiscal fourth quarter due to persistent supply chain problems, and Amazon reported the biggest decline in its profits in any quarter for more than 4 years, citing supply chains and staff shortages. And of course, the sixth biggest company on the Nasdaq is now something called Meta Platforms. Last week's rebrand for Facebook didn't stop the tide of negative publicity, which has included whistleblower Frances Haugen testifying to lawmakers around the world about leaked documents that she says show the company puts profit above user safety. So is it a bad time to buy big tech? To find out, I'm now joined by Randy Watts, Chief Investment Officer at O'Neill Global Advisors. Hi Randy, let's start then with Facebook. What do you make of the big rebrand? Is it an attempt to avoid negative headlines, or actually is it a new strategy investors should be excited about?
I think it's both. Obviously, the rebrand comes at a convenient time for the company. They've had a lot of bad publicity about the effects of social media on people, and obviously the whistleblower comments also kind of hurt the reputation of the company. But that being said, they've been working on the metaverse, which is really a virtual reality and a shared space reality, since 2018. It's a major initiative for the company. They're going to spend $10 billion this year on it. However, I would note that it's going to probably be a while till it really shows significant revenues and profits for the company. So it's a new venture that's very important, but it's not going to be the driver of financial results in the near term.
After the Facebook whistleblower, should shareholders in social media giants be worried about federal regulation?
I think it really depends on the company. I think Facebook is definitely under the threat of that. I think companies that have more monopolistic type enterprises in social media are an issue. But in the short run, the bigger issue is the fact that Apple has changed their privacy rules, and that is making it harder to track users on the mobile internet. And it is also making it harder to target ads, especially with regards to relevancy. And that hurt both Snapchat this quarter as well as Facebook. I think one of the reasons Facebook is trying to move into the metaverse is they like to find an advertising area and a revenue area that's not controlled by other companies. In this respect, they're trying to get away from Apple and Apple's controls and try to get a revenue stream that they can really operate freely on their own.
What about the very offline problems that have hit Apple itself? They're complaining about global supply chains and about a lack of semiconductors. And those are also problems for Amazon, which says that it can't find enough staff. So what do you make of those?
I think it's a very real problem, the supply chain and production problems. It's definitely going to impact this Christmas. If you think about last year, Apple grew revenues over 20% in that December quarter. It's a very important quarter for the company. I think this year we're talking about revenue growth that's going to be more in the mid-single digits. I think eventually a lot of these supply chain and production problems are going to get resolved, but they're probably not going to get resolved until the middle or second half of next year. So that is really going to weigh on a lot of these companies like Amazon and like Apple. As a result, a lot of the companies that don't have the kind of physical delivery issues that Apple and Amazon are doing better, and two stocks in particular there are Google and a stock I actually own, Microsoft.
I was going to ask then if you would advise investors to buy big tech now. Which good picks at the moment?
You know, I still really like Google. They're growing very well. A lot of their advertising revenue is driven by their own search results, so they don't have the problems with the Apple change in its privacy rules. They continue to ramp in cloud. Their cloud business 45%, and the stock's not particularly expensive. It's about 26 times next year's earnings, which compares to about 21 times for the S&P. I also like Microsoft. They're actually growing the fastest right now in cloud. Their cloud business in Azure grew 50% this quarter, which is faster than Google and faster than Amazon. It's a little bit more of an expensive stock at 36 times next year's numbers, but I think it's actually got the cleanest story in terms of government regulation and also control over their own fate with their own product sets. So I think that's, as I mentioned, I own the stock, but that's a stock I still am very enthusiastic about.
Thanks so much for that. That was Randy Watts, Chief Investment Officer at O'Neill Global Advisors. Well, before I go, here are some of the top stories in the big tech sector. The Facebook whistleblower Frances Haugen told the Web Summit in Lisbon last night she thinks the rebranding as Meta platforms makes no sense, given the security issues that have yet to be tackled, and she thinks Mark Zuckerberg should step down as CEO.
I think it is unlikely the company will change if he remains the CEO. And I hope that he can see that there's so much good he could do in the world, and maybe it's a chance for someone else to maybe take the reins.
Apple has cut back production of iPads to allocate more components to the iPhone 13 in the latest sign that global semiconductor supply crunch is hitting the company hard. iPad production is down half from Apple's original plans for the past 2 months. It's prioritising the iPhone, saying demand is stronger. And in China, TikTok owner ByteDance will reorganise into 6 units, while its chief financial officer will step down to focus on running the short video platform full-time. The company had a valuation of about $300 billion in recent trades, making it one of the world's largest private companies, but it has denied any imminent plans for an IPO in either Hong Kong or New York. And that's your roundup of the big tech sector. I'm Elena Casas, and this is Reuters.